Once again, good afternoon, everyone. Okay, our topic for today's discussion will be accounting for notes payable. Okay, um, even though the chapter 2 pertains to bonds and notes payable at nauuna yung bonds na discussion, uunahin ko po yung notes payable considering that I did not prepare yet any video discussion related to bonds pay to notes payable, I mean. Okay, so for today's discussion, our objective is at the end of this session you may able to understand the definition of a promissory note, and then at the same time we will able to understand, no, or determine the difference of interest bearing note and non-interest bearing note. And the third and the fourth objective of this session will be related to the accounting for interest bearing note and accounting for non-interest bearing note. So those will be our premise of today's discussion. So let us begin defining what promissory note is. A promissory note is an unconditional promise in writing made by one person to another, signed by the maker of the promissory note, engaging to pay on demand or at a fixed or determinable future time a sum certain in money to order or to bearer. Actually, no, if we're going to examine the definition of a promissory note, we can easily say that a promissory note constitute a pure obligation. Why? Because the promise or the obligation here is unconditional. Take note, a conditional obligation on your law on obligation and contracts provides that a conditional obligation pertains to an obligation that is dependent to the happening or realization of a certain uncertain event. Okay. While for a pure obligation, this refer to a simple obligation that is demandable at once. Okay, that is a promissory note. Okay, for example, if you cannot able to pay your dues, okay, for example, your parents cannot able to pay your dues in the academe, sometimes they may issue a promissory note, okay, a promise to pay the tuition or the dues. Okay, that is a promissory note. Okay, yung good for na tinatawag sa tindahan is a promissory note as well. Okay, take note, a promissory note based on the provision of the law, there is no specific format except for other transactions, really. Okay, particularly on mga real properties. Okay, so as we go on, now we are going to discuss naman on accounting of interest-bearing note and non-interest-bearing note. At the same time, we are going to identify the difference between an interest-bearing note and non-interest-bearing note. And at the same time, we can also identify, no, the difference of accounting procedure on interest bearing note and non-interest bearing note. Okay, rule. First rule that we need to determine is that the cash proceeds of the note is the present value. This rule is applicable commonly on notes issued for cash. Okay, take note, ha. This rule is applicable to notes issued for cash. Ibig sabihin, the present value of the note issued for cash is the cash proceeds or the cash received by the issuer of the note. Okay, so there are two types of note. Again, no, we have the interest bearing note and a non-interest bearing note. So our first example will focus on an interest bearing note issued for cash. Example, ABC Company issued a promissory note of 3 million pesos at 10% interest for 3 years. Okay, that is a very simple and obvious example of an interest-bearing note because an interest-bearing note bears an interest, or there is an attached interest that is being expressed in the face of the note. Okay, that is an interest bearing note. Okay, in our own dialect, okay, or in Tagalog, kung may interest na naka-attach or makikita, or interest rate na makikita sa note, obviously that is an interest bearing note immediately. Okay? So how are we going to account, okay? Okay, the interest bearing note issued. Again, the rule was the cash proceeds of the note is the present value of the note. In this case, our debit would be simply assuming that the cash proceeds from the issuance of the note is the amount, okay, of 3 million pesos. Kasi usually naman, pag we prepare a note for the purpose of obtaining or acquiring or procuring cash, whatever, okay, value that we stipulate, in the face of the promissory note, provided that it is an interest bearing, is the amount that we receive. Okay, that's the value of cash proceeds, Okay, so we debit here cash for 3 million pesos, and the same time a credit to notes payable of 3 million pesos. Sir, is there any instances that even though it is an interest bearing note, the issuer of the promissory note expressly provides on the note that pwedeng tanggalin agad yung interest related, o pwedeng ibawas yung interest from that 3 million pesos? Yes, pwede po yun. There is no law prohibiting that provision as long as the provision is not contrary to law, public morals, public order, public policy, morals, and good customs, that is applicable. What if, sir, if that would be the case, no? Ibawas na agad yung interest, okay, from the said note, no, na interest bearing. What would be our entry? Well, simple lang, no? Assuming diniscount na agad, no? Discounted agad. Assuming discounted agad yung note, no? Assuming discounted agad yung note, even though there is an interest attached to that. Okay, interest attached to that. Okay, our entry will be simple only, no? Determine the cash proceeds. Okay, determine the cash proceeds. For example, no, yung 10%, good for 3 years na interest, ibinawas agad sa 3 million, okay, the cash proceed would be 10% times 3 million multiplied by 3 years, that is 900,000 pesos. So the 900,000 pesos is immediately deducted to the 3 million pesos, kaya 2,100,000 na lang yung cash proceeds mo. And the deduction, advance deduction, kasi merong pong ganun, no, na nangyayari. There is an interest stipulated in the note, and then the issuer of the note agreed na ibawas agad yung interest related to that note. So we will record that as a discount on notes payable amounting to 900,000 pesos, because this is good for 3 years na interest. Advance payment mo lang. Pwede po yun, no? Yung first entry ko is that the issuer of the note did not agree to deduct immediately the interest na dapat bayaran. Instead, he asked for the whole amount. Okay? Itong pangalawang entry ko, the issuer of the note agreed to the um, yung magbibigay ng yung sa creditor, sa creditor na side, na nag-agree siya with the creditor na ibawas na lang yung interest. Okay? So kaya we recognize that advance payment of interest, okay? Advance payment of interest, okay, as a discount on notes payable. Dini-discount lang natin yan because later on, once we pay interest, dun po natin i-charge yon. Okay? So that would be credit to notes payable. Yung notes payable mo pa rin is at value of 3 million pesos. Sir, what if nagbayad na ng interest? O if the payment of interest, lagyan po natin ng space dito. Okay? No? Okay, lagyan po natin ng space. If the interest is paid on the first assumption, okay? On the first assumption, related to first assumption to, okay, that the issuer did not agree with the creditor na ibawas yung interest, okay? The entry for the interest would be debit, okay? If it was paid at the end of the period, that would be interest expense, okay? For 300,000 pesos. And then credit to cash if it was paid on cash. Take note, if it was paid on cash, we credit cash. If there is no payment made, we will recognize another liability account, okay, which is accrued interest payable. Let us assume na binayaran to ng cash. So that is 300,000 pesos. Yes, yung 10% is each year yan kasi annualize yung interest. Guys, ha? Annualize yung interest. If the problem provided you an interest rate, it is presumed that it's an annual rate, no? That it is not easy, it is not hindi po ibig sabihin that it is good for the maturity period. Okay? It is good for a annual interest. Okay? How about if the second assumption yung finalo na nag-agree kayo ni creditor, the debtor and the creditor agreed to advancedly deduct the interest, no? Good for 3 years. Well, then you will recognize interest expense pa rin kasi at the end of the period, you will recognize an interest expense for the period that would be 300,000. And then you credit, instead of crediting cash, you need to credit it against the discount on notes payable if the second assumption yung ginawa. Okay? Ganun po yun, ha. Those are two different accounting presumptions. Kasi yung first accounting presumption natin, the debtor did not agree with the creditor to deduct in advance the interest. While on the second assumption, the debtor and the creditor agreed to deduct in advance the interest from the face value of the note. Okay? Pwede po yun. Acceptable yan. Okay? So, that's it. Okay. Do you have any questions related to the first discussion on interest-bearing note? Okay, so for none, let's proceed to the next item on non-interest-bearing note. No, we will discuss naman an interest-bearing note. Okay, let's consider materiality and substance over form principle on non-interest-bearing note. Okay, again, the general rule again, no, cash proceeds is the what we called present value of the note. Okay, this is my assumption on this particular item, no? An entity issued a non-interest bearing note discounted in advance. So, ibig sabihin, meron pong discount na ginawa on the 3 million pesos. However, yung tanong mo ngayon, magkano yung discount na binawas sa 3 million pesos considering that there is no interest attached to that particular account. I mean note. Okay? Pero no, the market, okay, or the industry or the market provided you a prevailing interest rate of the same note. Yung prevailing interest rate of the same note can be used in determining the discount on the note, okay? Note, yung non-interest bearing note. This note is payable in 3 years. Okay? So, paano po natin to compute? And obviously, let us determine the present value of the note. Well, what is the present value of the note? Considering that the prevailing interest is 1.1, okay, 1.1 here, no? 1.1. Okay, let us divide 1.1 by itself for 3 times. Okay, that's how are we going to compute that, no? 1.1 divided by 1.1 and then divide it by itself first period and then the second period and then the third period. Kasi tatlong beses, no? 3 years po siya. So, the value is 0.751314,801 would be the present value factor for 3 periods. So to determine, okay, let us determine, no? Okay, kopyahin ko muna, guys. That is 0.7513. So I will only consider 3 decimal places. Okay? So this 0.7513, okay, shall be multiplied to the face value so that we can identify the what we call this, the um the present value of the note. Okay, the present value of the note, considering there was a discount on the non-interest bearing note. Okay? Kasi, hindi po natin malalaman magkano yung cash proceeds. Kasi nagkaroon ng discount. So, we need to determine magkano yung cash proceeds from the note considering that there is no interest attached. Take note, under substance over form principle, even though a non-interest bearing note has no interest expressed on the note, it is assumed in substance that there is an interest already attached to that note, but in form there is no interest. That is substance over form. However, we need also to consider the materiality level. If we believe that the discount on the note is immaterial already on the part of the company, obviously we will disregard that interest, because take note, we follow the principle on materiality. Okay? Okay? So, if 0.7513 is the present value factor, then we multiply it by 3 million pesos. Okay? Para makita natin magkano yung discount, the cash proceeds, obviously this was the cash proceeds from the note, no? And then if the face value is 3 million, kung 3 million yung 3 million yung value ng note, okay, yung face value of the note, by deducting the face value of the note from the cash proceeds that we have determined, by multiplying the present value factor to the face value of the note, okay, we can now determine the discount, okay, that is being considered here in this problem. Can we now prepare for the entry of this particular example? Yes. Obviously, we debit cash. Yung ide-debit natin sa cash, because this is an issuance of a note for a cash, okay, for procurement of cash. Take note, the cash proceeds that we receive is 2,253,900. Bakit? Take note, the company, an entity issue a non-interest bearing note discounted in advance. Take note, ha, discounted in advance. So, ibig sabihin, diniscountan po natin siya ng interest, prevailing interest in the market amounting to 746,100. Therefore, the cash proceeds that we receive is 900,000 pesos. Sir, what if there is no discounted happened? Well, let's go back to the general rule saying that the cash proceeds of the note is, okay, is the, what we call this, is the present value of the note. Okay, so we will recognize here a discount on notes payable. Okay, discount on notes payable amounting to 746,100, and then credit notes payable, okay, for 746,100. Okay, so that is would be 3 million pesos yung credit natin. Sir, how are we going to determine the interest expense in this case pag ganun po ang mangyari? Okay, because we just follow the principle of interest of the substance over form na rule. Okay. Well, to amortize, okay, amortization of the discount, okay, no, of the discount, susundin po natin yung sinasabi ng IPAS 39 as superseded by IFRS 9. Ang sabi doon, the acceptable method on amortizing the discount on the on notes payable is um, the effective interest method. Yung effective interest method of amortization sa notes payable is same with the effective interest method discussed on bonds. So I will not discuss anymore on the effective interest method under this session, considering that I have already prepared a discussion video related to effective interest method. Okay. So, what if the note is issued for a property? Okay, yung kaninang dinidiscuss natin, issuance of note for a cash. Dito, what if the note is issued for a property? Okay. So, interest-bearing note issued for property, the rule is that the purchase price is the present value of the note. Take note, ha? The purchase price is reasonably assumed as the present value of the note. Assuming that the example I provided, the amount provided in the note is the purchase price of the property. Oh, that is our assumption here, ha? Entity acquired a plant equipment for 2 million. Okay, which is the purchase price of the equipment na ina-acquire. Payable after 5 years. So, babayaran after 5 years. Interest attached to the note is 10%. So, how are we going to prepare an entry on that particular example? Again, the rule is the purchase price is the present value of the note. Assuming that the value of the note, the purchase price, I mean of the equipment is 2 million, we simply prepare an entry by debiting equipment because there is a value received na equipment at amount 2 million. Okay, that is the purchase price, 2 million. Then you credit notes payable for 2 million. And the recognition of interest, same lang nun. Na i-multiply natin yung 10% from the principal value, then annual yung interest na mag-charge. Okay? So, ganun lang ha. Pag interest-bearing note, in the acquisition of a property, the purchase price of the property is reasonably assumed to be the present value of the note. How about if the issuance of the note the acquisition of the note, okay, of the property was based on a non-interest bearing note. Okay, that is another assumption. What if non-interest bearing note yung inisyo for the acquisition of a property? Okay, for example, no, entity acquired a plant equipment for 2 million payable after 5 years. The cash price of the equipment is 1,500,000. So what would be our rule here? Okay, the rule will be like this. The cash price, no, the cash price of the property is the present value of the note. Okay, that is the rule. The cash price of the property is reasonably assumed as the present value of the note. So how are we going to prepare the entry in this scenario? Okay, well, you debit equipment at its cash price of 1,500,000. Okay? 1,500,000. Then, you credit you debit a discount on notes payable, referring to the difference of the cash price and the face value of the note. Again, what principle is being inserted on this type of transaction? Yung substance over form again. So, discounted the 500,000 pesos, then you credit notes payable, okay, notes payable for 2 million pesos. Oh, very basic lang, no? The difference between the cash price and the face value of the note is the discount on notes payable, or simply that is the interest that is attached already on the face value of the note. Okay? The cash price is the value of the property, while the difference of the face value of the note and the cash price of the property is assumed to be the interest that you are going to pay for the periods provided on the note. And how are we going to amortize that? Well, if there is no prevailing interest, no, there is no prevailing interest, we can simply use the straight line method of amortization. Okay. Sir, what if? Ito naman, another what if. Oh, marami pong what if sa topic na to, no? What if, assuming no cash price and agreed interest? Okay, this is the rule. Okay, this is the rule. Okay? The present value of the face value, okay, of the note shall be determined. Okay, ibig sabihin, kung ano po yung face value ng note, i-present value mo yon. Kasi, the present value shall be considered to be as the cash price. Okay? Iko-consider po natin yung cash price. Again, you need to determine the present value of the note. Okay? Okay? In order for you to consider that present value as the cash price. Okay? Paano po natin po yun, sir, i-present value considering there is no agreed interest on that non-interest bearing note? Well, as what we have no, ginawa natin kanina on non-interest bearing note for an acquisition of cash, what did we use on determining the present value? Well, we will use the prevailing interest of the same object of the obligation, which is the note, no? Oh no, that's the object of the obligation. The obligation to pay, okay, because to pay of no of the to pay a certain value of money, or simply using the prevailing interest rate of the same note. Okay, kung may kaparehong note yan in the industry, okay, yun din ang pwede nating gamiting interest rate for the purpose of discounting the the face value of the note, which is a non-interest bearing note. The difference of the cash price determined and the face value in the note is the discount of the note. Okay, take note na you need to present value the face value in order for you to determine the discount of the note. Okay? Kailan lang po to applicable na rule? Assuming there is no cash price provided and there is no agreed interest on that non-interest bearing note. If there is a cash price, the cash price and the face value of the note get the difference, and that difference is considered to be the discount on notes payable. Okay. So yun lang po yung rule. I will not provide an example for that because parang pareho lang po yun yung nasa taas kanina na issuance of a non-interest bearing note for the purpose of acquiring cash. Okay? Pareho lang po yun yung yung effect. Pareho yung treatment, pareho yon. Okay? Assuming ha, yung cash doon is diniscount na. Okay? Diniscount. Okay? Okay. Amortization of the discount. Okay, again, I would like to reiterate this that the amortization of discount on notes payable, the method that are we going to use is the effective interest method. I want you to watch the video on effective interest method on bonds kasi whatever steps being discussed there is same as to the amortization of discount on notes payable. Okay. That's it for our today's discussion related to accounting on notes payable. Hopefully, my presentation was clear, okay, as to the accounting of interest-bearing note and non-interest bearing note.